what is up, everybody? This is Jesse with Keeping It Real Finance, channel that always has your back and tells it like it is. Well, as fate loves irony, as that old saying goes, I was right about to post a video yesterday, just a quick little snippet on the Bitcoin chart and what was happening, and I had an error when I was about to do it, and so I figured, all right, well, I'll just have to re-record it a little bit later in the day, and as fate would have it, then the bottom fell out. So I'm bringing you a fresh video today on what exactly happened. So it all starts here, just like the thumbnail says, Gary nuked the market, crypto news, right? Now, we'll get into who Gary is in a second, but just wanted to share some of the comments I got from this post because I thought they were pretty funny. So we got one comment here. It says, it'll bounce back. I agree with you. We'll give that one a like. Guy is brutal. I guess Kraken didn't have a dad that supported Gary. I'm assuming that's a reference to FTX and SBF. We've got Dirty Gary. Okay, that's a good one. We got bruh, believe what you want. It's just simply a code. That's funny. It's all in the charts. Just have to wait to see what the news will be. Lol, most never learn, right? Moving on from there, this is the funniest one yet. Who's Gary? Who is that? So, who is Gary? Here we go. So Gary Gensler, chairperson, U.S. Securities and Exchange Commission. So Gary Gensler is an American government official and former Goldman Sachs investment banker. No conflict of interest there, right? Serving as the chair of the U.S. Securities and Exchange Commission. Gensler previously led the Biden-Harris Transitions Federal Reserve Banking and Securities Regulators Agency Review Team. All right, thank you. So Gary went ahead and did a post, which I think it is, nope, prior to Gary's post. Here we go. So prior to Gary's post, it gets better. I forgot about this part. Is that Brian Armstrong, who is the CEO of Coinbase, came out just a couple of days ago with this thread here, where he said, we're hearing rumors the SEC would like to get rid of crypto staking in the U.S. for retail customers. I hope that's not the case, as I believe it would be a terrible path for the U.S. if that was allowed to happen. Moving forward, he had a few things to add, right? So he says, staking is a really important innovation in crypto. It allows users to participate directly in running open crypto networks. Staking brings many positive improvements to the space, including scalability, increased security, and reduced carbon footprints. Staking is not a security. Here's a good primer, right? He goes on to say, we need to make sure that new technologies are encouraged to grow in the U.S. and not stifled by lack of clear rules. When it comes to financial services and Web3, it's a matter of national security that these capabilities be built out in the U.S. Number 5, regulation by enforcement doesn't work. It encourages companies to operate offshore, which is what happened with FTX, which is true, and I'll talk about that in a second. And then he says, hopefully we can work together to publish clear rules for the industry and come up with sensible solutions that protect consumers while preserving innovation and national security interests in the U.S., right? So that was the first shoe to drop, right, which impacted the chart, which we'll take a look at in a second. Then this is what happened yesterday afternoon. So Gary Gensler has a Twitter page, and he posted today, SEC Gov charged Kraken for the unregistered offer and sale of securities through its staking as a service program. Whether it's through staking as a service, lending, or other means, crypto intermediaries must provide the proper disclosures and safeguards required by our laws. So what exactly did Gary have to say? Well, here it is.
What does stake have to do with our securities laws? That's S-T-A-K-E, not S-T-E-A-K.
Office hours with Gary. Okay.
In the crypto markets, there are various ways to validate data stored on crypto ledgers called blockchains. And one of these ways is called staking. Investors lock up their tokens in escrow and help validate the next block of data. Some stakers are then rewarded with new tokens. Staking, though, can be complicated and time-consuming and can take big upfront commitments of tokens. There's also the risk that you won't get new tokens even if you stake. Thus, crypto entrepreneurs started offering what's called staking as a service. No, not like the steakhouse. Basically, if you transfer your tokens to a staking as a service provider, they take control, possibly pooling your tokens with thousands or millions of others while promoting returns. But here's the rub. When a company or platform offers you these kinds of returns, whether they call their services lending, earn, rewards, APY, or staking, that relationship should come with the protections of the federal securities laws. That means you, the investor, should receive important disclosures. For example, what do they actually do with your tokens? Are they really staking them? Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share? Are the underlying crypto protocols genuinely creating value on your investment? Or are they just new tokens that dilute the value of ones you already have? Remember, if you have a stake, that's S-T-E-A-K, if you have a stake meant for two and cut it into 3 pieces, it's still the same amount of stake. Unfortunately, because these staking as a service providers generally are not providing proper disclosures, there's currently no reliable way as an investor to know the answers to these important investment questions. Plus, when you sign on the dotted line or accept the terms of service, you are generally agreeing that placing your tokens with these providers may mean transferring your ownership to them. There's an expression in crypto, not your keys, not your crypto. You see, you're basically an investor in their platform. If it goes under, and we've seen plenty of that recently, you end up in line in the bankruptcy court. That's why it's so important that these companies and platforms comply with the securities law. After all, the securities laws, regardless of what you think of stake or staking, they're good for investors.
All right. So there we have it. That's Gary's take on what's happening on staking, not stake, right? So he announced that yesterday, and here's what it did to the chart. So prior to that, the chart was kind of hovering right up about here. So somewhere around, let's say 23. Gary's video came out and basically dropped us off a cliff. That's great. So we fell through this trend line that was kind of trending up support. We dropped through the next one right here, and now we are currently sitting at this support level that lines up pretty perfectly with the Fibonacci at 21.6. So going down here to the bottom, if you see the volume is still very minimal overall. So this tells me there has not been a huge amount of selling, but it does show basically bearish sentiment. Now, when we zoom out a little further and we look at some other indicators, we got the stock RSI, we got the market cipher B. What we can see in the stock RSI is basically that we are currently oversold right now. We're kind of sitting at the bottom. And you can see here our momentum kind of aligns with that. We've gone below baseline, right? And we do not have a turnaround just yet. Now, in terms of the positive side of this, I think that what Gary did basically sort of like dropped a bomb on the market that only partially exploded. And it looks like we are still hitting this support level. We still have roughly the same inflow into Bitcoin. That's the green wave up here. That's the money inflow, which has basically been propelling this market ever since the new year here of 2023. So that is all still positive. All right. So we do have a little bit to go on here, and we are oversold. And so we're basically due for a good rebound. Now, the question kind of coming back to this whole thing is Gary right? Right? Is Gary actually looking out for us? why even post a video like that, right? Why go after Kraken in particular? Well, Kraken is headquartered, as far as I'm aware, I'm pretty sure it's in San Francisco in California here in the US. So, you know, here's my thoughts on this. So, first of all, me personally, I have not been staking on any US based centralized exchange. Now, I've thought about it, especially with Binance US has been expanding a lot lately into the staking arena, adding multiple coins onto the platform because you know why? That's what users want. That's what the people want here in the US. They want to be able to get a return on their money that is better than what they would get at their sorry bank. That's kind of what it comes down to, right? So the bank really can't offer the returns that staking can. Now, in terms of staking, not all staking is created equal. Okay, so we have different types of staking, right? So, kind of what Gary's talking about here is this is a centralized exchange that's telling you they are staking, right? So, are they really staking your coins, yes or no? Well, it kind of does depend on the exchange if they're doing that, if they are not doing that. Some will lock up your coins and stake them, others do not. The way it works is that staking is the proof of stake mechanism essentially for the network of specific coins, right? So the way that you secure the network is you stake those coins. Every network like that has a quote mainnet. And if you were to stake them on mainnet, all you would have to do is send your coins from whatever exchange you bought them on to your wallet. And then you would connect your wallet to that mainnet, and then you would go ahead and stake. Okay. What some platforms do is almost like promotion. Okay. So they may not actually be staking on that mainnet. You may just be sort of locking it up. And they may be doing something a little bit different with it. Now, the irony here in everything is that he's sort of making a veiled reference to FTX and their recent collapse. But was staking the reason that FTX collapsed? No, it wasn't. The reason that FTX collapsed is that they were over collateralizing their FTT token into having value, and they put all the value into their own homegrown token. So when CZ and Binance dumped that token, everyone said, wait, this token has no value. And then they lost everything. It all went under a house of cards. Basically, CZ pulled the card right off the bottom. Okay. So that's what happened there. It had nothing to do with staking. If you look at some of the other collapses, Celsius, did they collapse because of staking or offering rewards? No. They collapsed because of risky lending on their side, right? Same thing with Voyager. Did they collapse because of staking? No. They collapsed because of, again, risky lending, right? That's kind of the underlying theme here. And so by Gary telling us he's helping us by eliminating staking or by going after Kraken staking, he's really kind of misguided in his approach, the way I see it. I think he thinks he's smarter than he is, probably, and he's kind of that's kind of how that video came across, right? I mean, I don't know why you're talking to me about steak from a steakhouse. That was just sort of cringy and bizarre, right? Really didn't resonate at all. I'm not sure where that whole thing got tied into there. But I think that, for the people here in the US, this is a product that people want. They want to be able to stake. They want to be able to get a return on their money, especially in the face of the high CPI inflation numbers. Our government is just printing money left and right. The national debt is the highest it's ever been. Wages are not keeping up with inflation. The middle class continues to get squeezed beyond belief. All of the above, people are looking for somewhere to invest their money to get a steady return. And so a safe and easy way to do that in the crypto world has been, well, you can buy your coins on the exchange, whether it's Coinbase, Kraken, whoever that's here in the US, and you could just leave them on there and you could kind of put them into the pool and then you could make some interest on your money. That's the whole point. And so by Gary saying that they're going after them and they're a security, it's really pretty much misguided. Now, I did a previous video on is crypto a security, yes or no? And my determination in that video was no, it's not. Now, granted, there are different types of crypto. Not all crypto is created equal. Some of it is much more like a commodity. Some of it is specific to that network that you're securing. Really, what kind of determines the dividing line there a lot of times, and what the SEC has looked at to date, has been if that coin had an ICO, or initial coin offering, because then it kind of feels like an IPO, right? That you would have in the stock market for a new coin that comes out. So I think I understand that in a way he's saying, we're trying to protect you by going after Kraken. Well, is Kraken a bad player in the market? By all accounts, no. Has Kraken gone under in 2022? No, they survived and they were fine, right? So by all accounts, Kraken appears to be above board, though certain other exchanges were not above board. And, the other interesting aspect of this is you look at the US versus crypto exchanges based all around the world, right? And so it's starting to feel like there's one standard for the US, and then there's a standard for everybody else. And usually in the past, the US tries to get a leg up in this kind of thing. But the actions of the SEC are kind of putting the US at a leg down here. And everyone else around the world that has access to the full Binance, et cetera, they can continue to stake their coins. It also puts companies that are based in the US at a competitive disadvantage, right? Because they're not on a level playing field. And so the problem, as I see it, is simply that the Securities and Exchange Commission is operating under a bit of a gray area in the current law that the crypto community has been asking for clarification, to clear up, for guidelines, etc., for rules for a long time. And nobody has been able to put that out there. And so in the meantime, we sort of have the SEC, going rogue after various players, right? So we have the SEC lawsuit with XRP, whether they're security or not. Now we had this rumbling of the SEC going after Kraken, and then lo and behold, it tends to tank the market, screws up everything good that we had going. That's the part that I really thought when I saw that. I thought, come on, Gary, you had to do this right now, right when the market's finally recovering. You had to do this. Thank you for your timing. Appreciate it, Gary. Thanks for looking out for us. And what the kicker in all this is that it's sort of a group in like an ivory tower that's making decisions, right? So they did not create a board, create a co-op, something, a group of cryptocurrency players, right? The big players, right? We didn't get a group of people together and say, okay, tell me how this works. How can we make this work for you while protecting the consumer, right? Ultimately, yes, we need to protect the consumer from scams like what happened with FTX, Celsius, Voyager, etc. An exchange, especially a centralized exchange, should not be allowed to take your money, your funds, and do something with it that's reckless without your knowledge, and then go bankrupt, and then tell you, oh, by the way, you never actually owned that anyway because you left it on the exchange. So the thing that Gary said that was true about the not your coins, not your crypto, that is true. As long as you leave it on the exchange, many of these exchanges, if they go down in flames, all you are then is another creditor in an endless line of creditors at their bankruptcy proceeding, right? So I do think there needs to be rules, a framework, guidelines, etc., laws for when you invest your money in a centralized exchange, what that centralized exchange can do with your money, right? Because if you think about it, where they should be making their money is off all the trading fees, things like that, right? Off the spread. That's where Voyager made a lot of their money, was off the spread. But in trying to be super competitive with the Binances out there and everybody else, and just doing whatever they can to scratch and claw and get market share, they're taking a significant amount of money and investing it into other companies that they thought were solid, stable, that had multiple years of a background. They thought they could invest in them and trust them and make a good return. The reality is that, in the various different crypto projects, somebody pulled the card out here, that whole card tower collapsed. Somebody does something here, something else collapses. There's a hack over there. All that stuff weighs on that. And so ultimately, at the end of the day, yes, we need to protect the consumer. But I think that Gary and the SEC's approach is misguided, because they're trying to regulate a space based on an outdated law. It's kind of like they're trying to regulate they're trying to like turn on the ignition of a car with the wrong size key. Like, yeah, it's a key, but it doesn't fit this car, and you can't just say, well, it's a key, it fits. No, it doesn't. It doesn't fit. So I think that the SEC is, they really just kind of mess this up. And what they do is they create more volatility. They create more FUD, fear, uncertainty, doubt in the market, right? Ultimately, there's probably a lot of people that weren't even staking in the first place. The staking on mainnets is still going to happen. People are always going to look for ways to make the most return on their money, whether it's, going to some offshore platform, however they do that, through VPN or whatever. There's always options out there, but why push it into that darker corner, that darker space, when you don't have to? And so ultimately, we need to have an inclusive conversation about this. And I still don't think we've had that. And now you've got Gary and the SEC telling you, they're helping you while hurting you at the same time, and hurting U.S. business. And in the meantime of all of that, what that does is, the lingering effects are, we're going to slow down innovation. The U.S.'s role in the world is diminished. This falls into global markets. You've now disrupted global markets just by one guy posting a 3-minute video on Twitter. So, and again, the timing, I mean, come on, Gary, you couldn't have done this in 2022, the worst investment year ever. You had to wait till we were rebounding and then do it, right? So thanks, Gary. Appreciate that. So overall, what I would leave you with is that crypto is bigger than any one person, any one entity, any one government. So ultimately, this thing that is crypto is going to move. It's going to happen, and it's going to happen on a worldwide level. The horse has left the barn. There's no corralling it at this point, right? There's only managing this process moving forward. And, what you could argue is this effective management of cryptocurrency and regulation here in the US? I would argue no, it's not, because we're trying to apply a standard from the 1930s to a brand new technology, a brand new use case, something completely different. So a lot more discussion needs to happen here. At some point, somebody has to get some regulation on this. Hopefully that comes sooner rather than later. What it is in the meantime, obviously, this is a buying opportunity for sure on this recent dip. We have so far kind of kept this support level, but Gary's video is sort of like one of these black swan type of events. Though it was, like I said, it's kind of like he threw the grenade and it only partially blew up, right? Like it blew up, but it's not as bad as it could have been theoretically. So, obviously anybody who's been using Kraken, huge disappointment here. I personally tried to use Kraken pretty early on, and I just didn't find it very user friendly. So I do not use Kraken. So that doesn't really impact anything that I'm doing or the coins that I'm following at all. And for the most part, if I'm going to look into staking, I look into staking on mainnet through my wallet. I have the control, right? So maybe that's another way to look at this, is you say, well, keeping it on a centralized exchange, that's the easy way, right? But by doing so, you are giving up control. You're not only giving it up to the centralized exchange, but you're giving it up to the SEC. You move it off of there, and then you've got the control, right? So that's probably how we'll leave this, is where do you want the control to be? So anyhow, I just wanted to post this video as kind of a quick, here's what's going on in the market. Here's what I see in the Bitcoin chart. I am hoping for a rebound here. I've been looking at these EMAs for quite a while. We were kind of heading straight towards a golden cross. Now we're sort of flatlined a little bit. This one's coming down, so not really what we wanted to see. What this tells me is I think that, obviously we still got a few more months. All along, I've kind of thought summer could be a good rebound for us. And, this recent run-up kind of happened a little sooner than I thought, so maybe that still holds true, all right? So if you enjoyed today's video, as always, make sure to hit the like button. Don't forget that I am also on Twitter at KIR Finance, where you can find me tweeting and retweeting on a regular basis. That's where I'm at. I'll show you what my page looks like. There I am right there. You can follow me here for daily updates, all that kind of good stuff. And lastly, for a friendly reminder, this is Jesse with Keeping It Real Finance channel that always is your back. Tells it like it is, and I will see you on the next one. Later.